All right, legends. Welcome to another live stream. Let's analyze the price of Bitcoin. I'll be honest, guys. Okay, let me put the music a little bit softer here in the background. And not much has changed since yesterday. Okay, so what we're going to do now is I'm briefly going to go through the larger time frame. And then, okay, just quickly want to discuss this little structure over here because I did get some questions around the structure. Okay, from if it's contracting, okay, what do we expect from a corrective perspective? If it's a 112 or 1112, what can we expect? So I just quickly want to answer those questions. And then, okay, I'm going to spend some time there, right? We're going to spend some time inside that little local structure over there. Because as per the thumbnail, can we get a bounce? Okay, and the one thing that I do want to highlight, legends, and I'm going to talk about it inside of this structure and inside of that structure, because we are now dealing with the exact same situation. Okay, so before I start, the one thing that I want to highlight is the following. A 112 or 1112, 121212, 34545, okay, inside of this structure carries the highest probability. It's number one. From a theory perspective, it always carries higher probability. Then, second highest probability is a 1, 2, 3, 4, 5, and you break down and you take the low. Ending diagonal. Okay, from a pattern perspective, you guys might be familiar with this pattern. It's an ascending wedge to the upside, and the probabilities of it breaking down and taking the low is high. That's where the pattern comes from. It comes from Elliot wave theory. Okay, this is number two. Then the third probability is a leading diagonal, where you have 1, 2, 3, 4, 5. You form a higher low and you continue. So these are the probabilities from a theory perspective that you are dealing with. So from a theory perspective, I always have to favor this scenario first. If it fails, I have to consider this scenario. Then if this one fails, it is this one over here. Okay, because we are now dealing with the exact same thing over there, and we are now dealing with the exact same thing inside of this structure. Okay, so I just quickly wanted to start off the live stream with a little bit of education. Now, okay, let's look at this structure is from the following perspective. If this is forming, let me just grab my pen, that ending diagonal, okay, where we have, whoops, yeah, let's do this. 1, 2, 3, 4, 5, okay. Just going to do it from scratch over here. I do have it prepared in a folder, but let's just do it from scratch. Okay, that's basically what we are looking at. And the thesis or the expectation is for price to correct in a three-wave structure, form a higher low, and continuation to the upside. In this scenario, you're looking at the lowest probability in terms of what I've just discussed upstairs. Okay, can it play out? Of course it can play out. It just carries the lowest probability, but it can play out. Because a leading diagonal, okay, carries the lowest probability. There's a high chance that if this is an ending diagonal, it's going to break down and take the low. The highest probability, which is a 1, okay, nested 1 2s to the upside, is you're counting this as a 1 2 1 2 1 2, should not take this low, and we continue aggressively here to the upside, which is actually way more bullish, guys. You don't understand that a triple nested 1 2 scenario is way more bullish, okay, than a diagonal. let me explain why it's more bullish. Is because, you know, you have to, as per the thumbnail as well, you're jumping on that trampoline. You're jumping on the trampoline, and the higher you bounce, the higher you get into the air. So it's bouncing, it's bouncing, it's bouncing. So basically what happens is, if this is, okay, let's now take this out the way. If this is 1, 2, 1, 2, okay, and maybe this is a 1, 2 and another 1, 2. It just, yeah, the low is a little bit low, but let's just stick with a double 1, 2 here for the moment. You're bouncing, and you get that big bounce to the upside. The reason why it makes it more bullish is because you have to repeat what happened over here. So you get the massive volume spike in the middle, and then it does the same thing to the upside. So you reach higher levels. This is why a triple 1, 2, double 1, 2, quadruple 1, 2, the more 1, 2s you build up, the more bullish it bounces to the upside. So that's what you want to see in, and you specifically get a lot of nested 1, 2 scenarios inside of bull markets. Okay, because it needs to build up that momentum to get continuation to the upside. If this is just a 1, 2, okay, 3, 4, 5, it's done and it falls back to the downside, you start the bear market. So it's not as bullish. So for the bulls, you want a nested 1, 2 combo to get acceleration to the upside, okay, because it's building up strength. You have to think of it as a spring being compressed, okay, that 1, 2 is compressing, and then it explodes to the upside. Right, and we've actually have a lot of examples, guys. Do you guys remember this little structure here to the upside? Okay, this is 1, 2s, guys. These were 1, 2s. Okay, I'm just going to count it. 1, 2, 1, 2, 1, 2. Can you guys see? 3, you get that acceleration with high volume, and then you get 4, 5, 4, 5, 4, 5. It goes much higher. If this was the only structure and it did not have that, the wave would have ended over there. You guys see the power of double 1, 2s, okay? Someone wrote a comment, and I'm not sure if you're here on the live stream today, okay? Someone wrote a comment yesterday after I finished the live stream to say, I'm talking BS, double 1, 2s doesn't exist. Without being nasty, what I would like to say is, if you want to criticize something, I suggest that you go and do your research properly. Because nested 1, 2s is very much a possibility inside of Elliott wave theory. They teach it everywhere, all the websites, all the books that you can buy and read about Elliott wave theory, they teach you about nested 1, 2s. So if you want to write a comment to say that it doesn't exist, please go and do your research first, okay, before you criticize. Right. Double 1, 2s are very valid, guys. Really, they are very valid. In fact, I had to even go and download a picture just to show you guys I'm not smoking my socks. Let me open it up here. Right, let's go here to a blank screen. And let me show you guys. This is inside of Elliott wave theory, right? Nested 1, 2s. This is basically what you get. You get 1, 2, okay? 1, 2, 1, 2, 3, 4, 5, 4, 5, exactly the way that I've explained it just now. Okay, it can be a double 1, 2, it can be a triple 1, 2, it can be multiple 1, 2s, okay? And they are specifically common inside of bull markets, okay? Especially if you start getting that euphoric phase to the upside, the acceleration phase, which we have not seen during this bull market just as yet. During this bull market, up until now, we have not seen an acceleration phase, an euphoric phase, the stupid phase. Okay, we haven't seen that yet, and there's data to support that as well. Right, so quickly wanted to point that out. Guys, remember to smash up the like button. I will go through comments in a second, okay? Well, in a minute. So I just quickly want to wrap this up. So the question that I got asked, and I will jump into this little structure here in a moment, is if this is, okay, a 1, 2, 3, 4, 5, okay, and you have basically your contracting diagonal. Okay, and we're now saying this is a leading diagonal. Basically, what it means is if this is a leading diagonal, you want to make a higher low and you want to see continuation to the upside. Okay, so the question that I got is to say that, Dewald, well, how deep can this go before we go up? Okay, there's a problem. If this is a leading diagonal that ended over here, okay, this cannot be the end of the correction. It's too short in time. because you have to take a time fib from the low, okay, to the high of 5, and your corrective structure has to finish after the 0.382, which is the 2nd of October. So what I want to explain over here is, if this is the top of a leading diagonal, this cannot be the end of the correction. Even if it falls down here, it cannot be the end. You need a larger, longer corrective structure. So this is potentially only the start, where you form your A wave, you form a B wave, you form a C wave. So this is only the start. You're still expecting upwards momentum, but you're still expecting downwards momentum, but you want the correction to finish after the 2nd of October, if this is the high. Okay, so if this is the high, this cannot be the end. Even if we take the low, we bounce here inside of the point of control, okay, it finds support. There's still a chance that you could roll over and make another low and take and invalidate the nested 1-2 scenario. Okay, and then you get the bounce. Right. Then, this is now where it becomes interesting, is to say that, well, if we do not consider a leading diagonal, so let me take this out the way, take this out, okay? So if this is 1, 2, 1, 2, and this is now just a corrective structure inside of this impulse, okay? This impulse already had its corrective structure, 3-wave corrective structure. This could be the 3-wave corrective structure that's either done or still going to continue here to the downside. This is your invalidation for the nested 1-2. It's not allowed to take this low. Ideally, the maximum target needs to be the 786. So when I zoom in, take a fib from the low to the high. This is where the bounce needs to happen, guys. This is where the bounce needs to happen. It's a big zone. I know it's a big zone, but that is the most bullish case scenario that we have on the table at the moment, is that price should not take this low. Okay. Because then you're potentially dealing with a 1, 2, 1, 2, okay, 3-wave structure and acceleration to the upside. A bigger bounce than what people are expecting. I hope that makes sense. Okay, so ideally, you're not going to go down lower than $103,000. Let's call it $104,000. Okay, because that's usually your maximum target for a second wave. Right, and you can see how shallow this one was. Okay, if I take a fib, just out of curiosity, I think it didn't even tap the 0.382 if I'm mistaken. If I take a fib from this low to the high, oh yeah, that's where we front run it. Can you guys remember? Because I remember doing a live stream, okay, during this, and I said, how funny would it be? Okay, we were busy here with the corrective structure, we were coming down again, and when we were here, and I said, guys, how funny would it be if we do not tap the 0.382, which is the minimum target, considered the minimum target for a wave 2. And we bounced, and then we got the bounce, right? We did not, we front run the minimum target, okay, for a second wave. Okay, just want to see where we are right now. So if I take again a fib from the low to the high, well, we've already at least tapped the minimum target. We're on our way here to the 50% Fibonacci. So the one thing I want to point out, guys, is that, you know, there's a little bit of hopium. And, you know, I did discuss yesterday, what if we do not take that damn low, right? What if we do not take the damn low? I just have to point out that price is extremely close to that low. And you have also tapped the 0.88 Fibonacci when you take a fib from the low to the high, which does unfortunately increase the probabilities in taking this low. We do have a nice little order block there that can provide support. So when I zoom into this little structure over here and we talk about that, I will show you, well, which are the levels that I'm watching for a bounce to the downside. Okay, so from a simplicity perspective, okay, you have a pump. Okay, let's just keep it simple. You have a pump, you have a correction. Well, the next area to pay attention to is the 0.5 Fibonacci. Next area is the 0.618. 786 needs to be the maximum target. We have loads of support in this zone. Loads of support. Okay, so to keep it simple, usually the best bouncing zone is when you take okay, the point of control of this entire range over here. This is where the most amount of volume was traded. So it's likely, okay, if things get nasty here to the downside, this is where you want price to find support, because there's a massive volume node over here. Slightly above, can you guys see this high volume node over here as well? Okay, slightly above. Okay, basically aligns with all of these beautiful lows over here. Okay, it's basically here at the 0.618 level. So from a volume and support perspective, you wait for price, okay, to show you strength to the upside, right? Forms that higher low and continuation. Dips below, gets acceptance back above. Okay, you guys know the deal, right? I'm not going to go through that every single time. We know how to trade these swing failure patterns, but I will show you some fib extension levels to the downside that will make it easier. Okay, but we do have, the one thing, okay, is we do have loads of support. If price wants to fall here to the downside, we have massive support. Okay, high volume node, there's another high volume node, price is going, you can see inside of this zone, okay, it aligns with this area where price needs to find support. So for the bulls, okay, remember the nested 1-2s that I've spoken about here to the upside. You do not want price to take this low. Okay, you want this to be part of a 3-wave corrective structure that's going to find support in this box and continuation to the upside, because that will give us that euphoric move that everyone is waiting for. If price is going to take this low, okay, then you still have that bullish leading diagonal scenario, but it's the third highest probability. Okay, yeah, right. Just has to be said, guys. It just has to be said. Right. Okay, so let me take this out the way. Now, what I want to do is remember to smash up that like button. Also, I just want to point out again, for those of you that are not trading with Bluffin, they still have 10% cash back up to $3,000. So if you deposit $30,000, you get $3,000 on top of the money to trade with, and you get upgraded to VIP 1 and 2 depending on how much you deposit and trade. Really great exchange, and there's some, I don't know if I need to spill the beans today, okay, but let me just say this whilst my alarm's going off. Breaking back in trend, I think it's some local structures that I was looking at. I might have to jump in here to the local structure, okay, because alarms are going off, and I had a scenario planned out. Yeah, this is the scenario that I had planned out. Okay, guys, now that the alarms are going off, I just want to pay attention to see what's going to happen over here. But basically, the reason I started off the live stream the way that I did is because you have a 1, 2, 3, 4, 5. You have a leading diagonal potential, which is the third highest probability. Because if it has a higher chance of being an ending diagonal, which means you're going to come and take this low. So I'm giving the bulls the benefit of the doubt to say that, well, what if? This is now the last chance the bulls have over here, guys. It's the last chance, because if you're going to take this low, I believe that we're going to accelerate to the downside. There's the last chance for the bulls is that you have a 5-wave structure in a leading diagonal to the upside, and this is part of an ABC or a 3-wave structure here to the downside. And it looks like, okay, here on my chart, we've ever so slightly front run the 1.618, but there's a chance that this is a 1, 2, 3, 4, 5 inside of your C wave, and you want to see the bounce. Okay, but price needs to bounce in this zone. It needs to bounce. Okay, if there's any chance for the bulls to move higher and claim this high, it needs to bounce in this zone. I have to stress that this scenario does not carry the highest probability, but I'm giving the bulls the benefit of the doubt as per yesterday's live stream. If it needs to bounce, it needs to bounce now. Okay, and we have now officially reached the moment where it needs to bounce. Okay, if it's not going to bounce here, guys, by the 1.618, it's not going to look good, because also if I take a fib from the low to the high, Okay, 786 has not been tapped yet, which is a maximum target for a second wave. So if it wants to get a little bit choppy here, okay, it dips down once more, gets acceptance back inside the trend. Okay, I know that I can sniper these levels with exceptionally good risk management, and if I'm wrong, I get either stopped out at break even or I lose a little bit of capital. Okay, so I know how to attempt these longs with really good risk management so that even if I'm wrong, I get stopped out with almost nothing. But I can tell you now, I'm not going to build a position here with my stop below the low because of the probability inside of this scenario. I would rather play the SFPs. Okay, I think we literally just dipped. I think we dipped. Yes, we did dip the 1.618 at the moment. Guys, legends, pros, whoever, you know, if you guys are here, you know what to do. You know what to do, right? You know what to do, okay? If I was not here on the live stream, my entry would have been there and my stop loss below the low. Okay. And it needs to bounce. Okay, it can still come and tap the 786 over here, but it needs to bounce now. Price moves in your favor. You know what to do. You protect your position. If you are wrong and it wants to turn over and fall down again, you lose nothing. Okay, maybe a little bit of trading fees. Okay, right. This is, guys, this is where it needs to bounce. For the bulls to have any chance here to the upside, this is where it needs to bounce. And if I can tell you now, if I wasn't here on the live stream, I would have entered right here. Okay, I would have entered right there with my tight little stop loss. And just to give you guys an idea, okay, if you get wrecked with these types of trades, I have no idea what you are doing, okay? Because if you're a sniper about this and you know how to trade this, you're targeting the highs to much higher levels. Just to give you an idea, your stop loss is 0.06% away. It is a tiny, 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 tiny little stop loss, and this is my favorite way of trading. This is what enables me to catch tops and bottoms. Because if I'm wrong, I lose a little bit. Because the only thing that I can control is my risk. I can only control my risk. I cannot control where the market goes from here. But I can manage my risk very well. Price moves in my favor, I protect my position. Okay, price moves a little bit higher, I usually take profits to cover my trading fees. Okay, if I get stopped out, guess what? I lose nothing. Nothing, 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 nothing. So if I'm wrong, I had an attempt, a free trade. It's my favorite style of trading, guys. It's really one of my, it's very aggressive because sometimes, you know, there's pros and cons. The pro is, fuck, you caught it and it runs. Okay, the con is it stops you out and then it runs. Or before it runs again, you know, those triple bottoms. So they do get tricky and they're not easy to play if you're not used to them. You have to practice them. You have to back test them. Right, but yeah, guys, you know, this is a potential trade. Definitely a potential trade. I do know that C waves like to end on a high amount of volume. So let's see if it gets the bounce here. Okay, unfortunately, I did not enter this trade because I'm here busy giving you guys the alpha in the education, and definitely a trade that I would have gotten in already, and I would have most probably already protected my position. If I get stopped out, get acceptance back above, I re-enter, but I will apply the same over here. Okay, so if it wants to turn around and it does exactly the same thing over here, okay, so maybe after the live stream, if we haven't tapped the 786 and it comes down again, I will attempt, if I see the reaction, of course. Okay, right, but I was waiting the whole day for this level to be tapped. The whole day for this level. And now I missed it. Okay, and you might be asking yourself, well, Dewald, why don't you enter now? Because my rules state that I'm not allowed to FOMO into a trade. I will miss the trade rather, and I will look for a next trading opportunity. That's just part of my rules, okay? And as my rules has kept me profitable, I need to follow my rules. I need to stick to my rules. Right, so yeah, legends, I just quickly wanted to jump here into the local scenario. The one thing that I do want to stress is that this scenario that I have painted over here does not carry high probability. Okay, but you can see that I can still give the bulls the benefit of the doubt by getting in with good risk management, and if I'm wrong, I lose very little to almost no capital. Okay, Right. This is basically the structure that I wanted to discuss, guys. Now, okay, let's switch all of this off, right? It's the only way, this morning there was also a scenario for a double 1-2. What if this is a 1-2? Another 1-2, okay? We were looking at another 1-2 over here, and invalidation was the low because a nested 1-2 structure always carries the highest probability. Then price took the low. So that number one scenario in the bin. Now you have to consider a leading diagonal for the bulls. And for the bears, okay, you want to claim this low, right? Because a ending diagonal does unfortunately carry higher probability than a leading diagonal. Right, so now what I want to do is, guys, I want to just look at levels quickly here to the downside. If price is going to collapse here to the downside, what is my next trading plan to the downside? So there's a level that I am watching. I just want to make sure that I have it. This is basically the end of the corrective structure if we're going to still find upwards momentum. But the one thing, okay, let me just do this manually. I'm not going to go and look for that scenario now. Okay, trend-based FIB. Okay, next level to the downside is the 1-to-1 extension. You can see already got a beautiful reaction here at the 786. Okay, when we tapped the 618 for the first time, we got a reaction. So it tells me that it's a valid FIB pool. We're getting a reaction at each level. So if price wants to fall down here aggressively, this is the next level that I will be paying attention to. Look at that beautiful swing failure pattern. Okay, guys, it's not about catching the bottom and you're like, I've nailed it, it's just going to go up. Okay, you have to take profits, right? If you get into a swing failure pattern, right, and you start claiming the local highs, you need to start taking profits. Okay, so I will be applying the same thing because it could do the same thing and do this, right? So you want to take profits on the way to the downside. So that's my trading plan, guys. Purely from a trend-based FIB extension perspective, I am very interested in the 1-to-1 extension. 1.236, 1.382, 1.618. And then what makes these levels so interesting is that when you start aligning it with other levels of confluence, like point of controls, okay? And just to point out here, guys, is that we do have a point of control, okay? More or less at the 1-to-1 extension. So that could be a swing failure pattern. We have volume supporting this level. A little bit further down is another naked point of control, slightly above, okay? But now this one is very interesting to me. This one, if things gets aggressive here to the downside and it just slices like a hot knife through butter, now the 1.382 is a very juicy level for me, and you will see I've marked it as a high volume node. And the reason I've marked it as a high volume node is that if I look at the structure, okay, like I've done during the beginning of the stream, fixed range profile for this entire structure. Just wait for it to load up, guys. Okay, here we go. This entire structure that is formed over here. That. Can you guys see that high volume node? Pay attention. Okay. High volume node. Alignment with the 1.382. We'll definitely be looking for a bounce. 1.618 aligns with the point of control of this entire range. So definitely some levels that I will be paying attention to. So can you guys see, I don't even have to look at Elliott wave theory. For those people that say it's very complex, I don't know what you're talking about. Okay, why are you saying 1, 2, 3, 4, 5 and ABC and WXY? Purely from a support perspective, okay, I'm looking for, I will observe the reaction at these levels if price had to just fall down here. Okay, one of those levels is going to give me a bounce, and one of those levels are going to give me a trade, if not all of them. What if it does this? Bounce, bounce, and it just keeps on bouncing? Okay, I can take advantage of those little moves. Those are scalp trades, guys. Okay. Right, that is basically what I'm looking for. Also, what I have done, okay, maybe let me go through some comments. Okay, let's see. I just want to go back here onto the 5-minute time frame. Then I'll go through some comments. Is it getting the bounce? Is it getting the reaction? I want to look at CVD. What is happening? Bearish CVD. Not what you want to see, okay, but you can still get in with good risk management. That's the thing, guys. Often I have gotten into trades, and I know the pro members have seen this as well. Often you will get into a trade, okay, and you're like, why am I seeing now bearish CVD building up here, okay, and it looks like yellow wants to make bearish CVD. But the thing is, you can get in with such good risk management and protect your position that, okay, you can actually ignore the noise over here, right? Because often what happens is it starts forming bearish CVD and it invalidates the bearish CVD, okay? And then all of a sudden it makes a correction and CVD tanks down, okay? Because people were looking for shorts in the zone, and then it makes a higher low and it continues. And you're like, shit, I didn't get into the trade because I saw bearish CVD, but now it's making bullish CVD against those two pivots. Well, that's another opportunity to get in. Can you guys see? There's always another way to get into a trade. So I will wait for the bounce, and the retracement is going to get me another opportunity to get in based on what I'm seeing. Right. Now let's go through some comments. Still finding support, yeah. Though on D-line from all-time high, 1 hour. D-line, let me check. D-line on the 1 hour. Let me just clean up the chart here, guys. Yo. So there's a couple of D-lines. Let me just see if I have my trends here all marked out already. Okay, that's definitely... Ooh, okay, I see what you mean. Okay, it's broken trend. Okay, I see what you mean. And it's holding above the trend. Right, so yeah, there's a chance. That's what I'm saying, guys. There's a chance. There's such a slim chance for the bulls, and I'm showing you the swing failure pattern so that you can get in with good risk management. Okay, and for now, this looks like a three-wave structure, I must say. Okay, if I zoom into this little structure over here, for now it looks three-wavy. So the bulls have a chance. This looks three-wavy to the downside at the moment. So this is where it needs to stop. Okay. Can still go down a little bit low, but you don't want to lose the trend, because as soon as price goes down, remember the rules, guys. If price goes down and it claims the low, okay, you have to adjust your trend. Okay, then your trend's going to be there. As long as it does not claim the low, this is your trend, and it's potentially a breakout. Okay, just want to make sure that I have this trend correctly set up over here. Yeah, okay, it's touching enough pivots. It needs to at least just touch 3 pivots, then I'm happy. So yeah, from a trend line perspective, you don't care about Elliott wave theory. Guys, I can tell you now, I can apply my trading strategies without looking at Elliott wave theory, and I have started trading, and I was a profitable trader before I knew anything about Elliott wave theory. It's a skill that I've learned after the fact, okay? Because I'm that type of person, and I'm sure you guys are as well, is that, you know, when you master something, so let's say you're a mechanic and you can fix all the cars, where to from there, right? You want to improve your skills. Perhaps you become a specialist in Teslas or in Rolls Royces, okay, and you become a specialized mechanic. So, you know, I'm just that type of trader that, what's next? Okay, I've mastered the D-line strategy. What now? I've mastered swing failure patterns. What now? Okay, and the last step for me was to master Elliott wave theory, because I knew from numerous people and from research, they told me that it is the most difficult trading strategy in the world, but it's the only prediction tool that we have for the markets. I was like, okay, I'm going to leave that for last, okay, because that sounds very complex. I first want to turn profitable using my strategies, and then I'll learn Elliott wave theory, and then I'll see, once I start combining it, how it improves or not improve my trading. And yeah, so far it has improved the profits on my trading. Hey Dewald, can you look at Fala Network? There's a D-line breakout at the long-term chart. Yes, I can go and look at some altcoins in a moment. These levels make some money if you play out by the rules. Yes, Steph, for one, definitely. Sin Games, appreciate the mods being here. 107k looks interesting as well. Yes, let's see. Do I have any confluence there at 107? Okay, let's put on some more levels. You guys can see I have all my levels marked out in different folders. Yes, high volume node is exactly there by the $107,000 zone. This little high volume node, okay, is here by the $107,000 zone. So it also aligns with those trend-based fib extensions to the downside. My favorite way of trading, okay, is trend-based fibs, guys. I love trend-based fibs. And I was good at trend-based fibs before I knew Elliot wave theory, and then Elliot wave theory just gave me that extra edge, because now when I know the waves, the 3 corrective structures, the 5 wave structures, it helped me to know where to pull the fibs from. Because in the beginning, before I knew Elliot wave theory, I was just guessing. I was like, fuck, okay, let's see. It gets a reaction. Okay, maybe this is a valid pull. But I didn't have context around why I'm pulling those fibs from certain levels. Right, so it needs to hold the trend, okay? And the maximum bounce that you want to see, like I've highlighted, guys, is you want to see the bounce happen, maximum target, okay, either where it's now or 786. Okay. Remember the game of probabilities. All right, guys, it's just a game of probabilities. Nothing's ever guaranteed in the market. But if price had to fall and tap the 0.88, you increase the probability of taking that low. And this is now the danger that I do see, unfortunately, with the structure, is that price has tapped the 0.88 when I take a fib from the high to the from the low to the high. Okay. Unfortunately, this is increase the probabilities of taking that low. And this is why if I'm getting into a long year, I'm damn well going to manage my risk, because I know that I'm trading against probabilities. So you damn well need to protect your position and manage your risk properly. Okay, there's no 100x with your entire portfolio inside of this zone. You're going to get lucky a couple of times, but more than likely you're going to burn a big hole in your account, okay, if you're reckless over here. Because I know for a fact, because there's someone that spoke to me yesterday and they said they are building a massive position over here where they stop below the low. And I'm just like, whoa, what is massive? Like 20% of your portfolio, 100%, 50, I don't know what is massive, but the word massive was used and that makes me nervous. Okay, because if you're building a massive position and you're just adding and adding, and with every dip you're adding, and by the time you get stopped out, you have nothing left or 10% left, you know, it's not a great way to trade, guys. It really is. If you want to trade, okay, because I know there's traders that do trade like that. If you are confident that you are going to get a bounce, right, and you are building a position, you should still build your position so that if you are wrong, you only lose 1% of your portfolio, or 2%, maximum 3% of your portfolio. So you could add 1%, you can add another 1%, and you can say, okay, well, this is my last 1% that I added over here. Now, if I get stopped out, I'll only lose 3%. Okay, you can still trade these structures responsibly. Right, someone asked for... Guys, my TP areas here on Atom, just quickly wanted to highlight. My TP areas on Atom got hit. TP1, okay, that was my TP1. TP2, okay, and I left a little... I did learn from my lesson yesterday. I left a little moon bag open. Okay. So I still like the 1-to-1 extension over here. Ideally, what I would like to see is you can see where it got rejected at the trend. Okay, but TP areas got hit. This is the Atom trade that I also spoke about yesterday in Dylan's stream, and Dylan also spoke about it. It's like it looks really good that it's going to come and claim these pivot. Nice little 5% move. So if it comes down, okay, this is now where I'm going to pay attention. But I'm keeping an eye on my load up zone box. Okay. Right, so let's go and look at Fala Network. Someone asked for Fala Network, PHA, if I'm not mistaken. Right, and remember, guys, all of these tokens can be traded with the links down in the description where you qualify for the best trading fees and sign-up bonuses. Okay, I see what you mean. Let's go here on to the 8 hour. I just want to see where we are, what is happening. Okay, it's breaking out. it's breaking out. I mean, even if I put it there, it's breaking out. It's closing high time frame candles above. It is trading above the point of control. Okay. It's a good sign. Now I want to see it did close bodies above. So guys, I mean, the bulls have a chance. Look at this nice buying pressure that's kicking in here. It closed bodies above. Yeah, just not above this high. That's the only concern. It actually needs to eat that high. Okay, I know this is Dylan's favorite strategy as well. You will say, first, okay, it closed bodies above these high. That's great. Second is it needs to close bodies above this high, which it has failed to do. So you need to wait for confirmation. So let's do this. Okay, let's do a magnet, snap it onto that little high. And if I zoom in for the bulls, you want to close a body above this line. Okay. Let's see on the 1 hour. There's not even a 1 hour body candle close above. Let's see 15 minutes. 15. Okay, but 1 hour I think is the best time frame, especially for these breakout trades. Okay, the higher the time frame, the better. So I'm not convinced just as yet. Okay, yes, it could, one could argue that it already broke out and did the retest. Okay, fine. But I don't have confirmation yet. Yeah, it needs to claim this high to create a higher high with confirmation, because then you're potentially changing market structure to continue momentum to the upside. So this is something that I know Dylan likes to talk about, is that you will rather wait for bodies to close above before you will consider a long. So you'll go in with less capital because the stop loss is far away, but at least you have a confirmation that momentum is going to continue. If you just enter blindly over here, okay, you don't have confirmation yet. Right. Let's go through some more comments here. Okay, maybe we had a wave A down on 4 hour now. We go up for a wave B. Yes, Sin Games, definitely a possibility, okay? Because in the worst case scenario, okay, let's take all of the noise here out the chart. If this is the end of the impulse in a leading diagonal, okay, this is wave 5. Remember, it's the end, right? You need a wave A. You need an A. Okay, you always start with ABC. When you have the top of an impulsive structure, you always have to start with A, like the alphabet. Then you go with B. Then you go with C. Once you have an ABC, then only can you start thinking about a W. Okay, I don't want to make it too complex, but basically what I'm trying to say is, if this is the end, this is potentially your A. And it can stop here and create a B, and then go down for a C. And now that you have a C in a three-wave structure, if it did not hit your minimum time requirement, then you're going to look at a W, which means the correction needs to continue. Okay, and then you have another ABC, and that gives you your X. And then you have another ABC, and that gives you your Y. And often the only time I will start looking at a WXY is if the corrective structure has not finished in time. And this is what I mean by time. So if I take a time from the start to the end of the impulse, just click it on there. Okay, if I can see an ABC and it made a low before the 0.382, then I will label it as a W. Then I'm still expecting an X and I'm still expecting a Y. Okay, guys, golden education that I'm providing over here. Okay, golden education. Right. Let's go through some comments. I've basically said what I wanted to say over here. Okay, we can also look at ETH. Guys, I do read all the comments after the live streams. Okay, you might think that I'm missing your comment. I do make a point of reading comments after the live streams. Last night after the live stream, I read through every single comment that you guys made, and I did see that there was a lot of requests for a little bit of ETH analysis. People were asking ETH, please, ETH, please, ETH, please, and I missed all those messages. So today I will go through a little bit of ETH. Okay, let's look at ETH here on, let's go first, higher time frame. Okay. Right, let me see what I have prepared over here. Yeah. Yeah, okay. So, very interesting. Let's start. Okay, I guess you guys are interested in the local structure that is formed here to the upside. Right. So I mean, there is a 1, 2, 3, 4, 5. Okay, there's a chance that the high is in for now. Whether you want to count this as a 1, 2, 1, 2. Okay, that's the most bullish case scenario. 1, 2. 1, 2, it can just 1, 2 itself out of here and just mahala here to the upside. Okay, that's the most insane bullish case scenario. But from a conservative perspective, I can count 5 waves. Okay, so in the most bearish case scenario, each impulse has to correct itself. So even if it falls here to the downside, you expect, okay, look at all that support, a higher low for continuation to the upside. What I can see here more locally is it has started off correctively. There's no impulsive structures to the downside. It doesn't mean that it can't go lower, but what's happening here more locally tells me that this low is protected and this is a bullish structure. Whether we go down lower or whether we form multiple 1, 2s to the upside, whether this is a 1, 2, okay, maybe this is another 1, 2. This could be another 1, 2 where you do not take this low, okay, and it just accelerates to the upside. Right, this what's happening more locally is corrective. Just like that was corrective. Just like this was corrective. So there's still a high chance that worst case scenario, okay, you come down deep, but you still make a higher low. Best case scenario, this low is protected and this is forming another bullish structure to the upside. Okay, so what I want to do now is zoom into the 1 hour time frame and let's look at this structure. Okay, yeah guys, this is what I mean. Okay, I'm not going to go into all the detail, but this overlappy price action tells me that it's corrective to the downside. Okay, it already found support inside of this order block. It ate up the liquidity below. That's what I like to see. When I see a little order block like that and I see a dip below, okay, it's grabbed the liquidity. Great. Okay. The only concerning thing that I see here is, so tick 1 is it grabbed the liquidity. Love it. It came back up, it retested it, and now it made another wave here to the upside. The only concern, and I have to always look at bearish case scenarios as well, is you have not taken that high. So you're not changing market structure, local market structure yet. I would like to see another push to the upside, because then you have a higher high. You come down, you make a higher low. Okay, that provides another opportunity to go and claim this high again. Right, there's also a nice little trend forming over there. So maybe you can just wait for the break of the trend. I think if ETH is not going to hold this zone, it's going to come here. Okay, you still have a lower high. So there's a risk, guys. There's still a risk. I wanted, you know, for me to be like certain that it's, well, with a higher probability that it's going to come and claim this high, I want to see change of market structure and you have a lower high over here. Okay, so for now, the bulls are not in control. Only then will the bulls be in control. Okay, so there's still a risk in breaking down over here. And this is most likely where you're going to find support. Okay. So guys, what I usually look for is you will see with each impulse, with each movement to the upside, there's usually 2 zones that you need to pay attention to. Okay, it's this one and this one. You will see it happens everywhere. Okay, I'm going to show you now, right? I might have to use a little bit larger time frame just to show you guys the zone perfectly. Okay, impulse, look here, you have an impulse. There's your first zone, there's your second zone, worst case scenario. But there was a mini zone over here, and that usually happens in extreme bullish case scenarios. Right, and basically what that refers to is when you have a 1, 2, 3, 4, 5, okay, zone 1, zone 2. It usually bounces there, where ETH is now bouncing at the moment, or it loses it and it comes to the second zone. So without bringing any Elliott wave theory into it, because I see some people get upset with Elliott wave theory, okay, consolidation areas provide support, because consolidation areas has volume inside of them. Okay, there's a little consolidation area. Okay, there's lots of volume traded in there. You have a nice little consolidation area over there. Okay, whenever you have upwards momentum or downwards momentum, okay, you look for these consolidation areas to provide support. Right, and this is where ETH now currently found support. So there is some bullish signs, but I'm not convinced yet from a confirmation perspective. The same with FALA. FALA has not changed market structure. ETH has not changed market structure yet. There's a possibility it could continue to the downside. So if you did get into this trade, I know Andy got into this trade. And I know Andy's got great risk management. His position is most probably already protected as well. Okay, so I say it's always worth a trade if you can get in with great risk management. Why not? If you're wrong, you lose nothing. So what? Okay. We had some scammers to attack my comment, and I did let Dewald know about it. Since I'm not, since mine showing, okay, is showing you get it. Right, did we have a scammer attack? I'm from India and love your analysis. Marvel, absolute pleasure, man. Absolute pleasure. Yes, the only problem with my feed that I'm using to put the comments on the screen is that when the mods deletes comments, it doesn't delete it from this feed over here. And sometimes I post comments that's already been deleted and I'm like, oops. How can I study off you, Adam? I am designing a trading course, and the little clue that I will leave everyone with is that if you signed up with the Bluffin link down in the description, okay, you will benefit from the trading course. I'm just going to leave it at that. Right. That's some free socks. Hey, Devil, you mentioned a website yesterday which you can use as a trading journal. Yes, I found it. I did find it. Let me see. Okay. Here we go. It's this one over here. I've got no affiliation, guys. I do not get any commission or any money or anything from this, but this is a website that I've used. tradermake.money. Okay, journaling website that you can track all your trades. It integrates with a lot of exchanges depending on which exchange you use. You can export data, import data, make extra notes, include columns, export columns. There's lots of YouTube videos on how to use this as well. And this is a platform that I've used for many, many years. Okay, right, there we go. Okay, still, it looks like it's bouncing. It looks like it's still bouncing. It wants to find upwards momentum. I mean, guys, this is the last level for the bulls, right? This is the last level for the bulls. I mean, if it needs to bounce, it needs to bounce now. Because I think if it's going to break down here, it could get acceleration. Guys, if it's going to break down here, it could accelerate here to the downside until it hits this zone over here. So you do not want to be in adding, thinking you're going to catch the bottom over here. You need to wait for price to slow down. Okay, you need to wait for some bounces. You need to see some bullish CVD, RSIs bottoming out, whatever you use, MACDs. Okay, because something that I also just want to point out here on the 1 hour time frame, just from a pattern recognition perspective. Okay, just to keep it simple, look at this, guys. You form a low and you form a lower low, but do you see that? And then you have a bounce and you take the lows. You form a low, you form a lower low, you have a bounce and you take the lows. It's just a little pattern. Okay, you form a low, you form a lower low, you get a bounce. Woo! Is it gonna do the same? Just something that I saw this morning. Right, that's why risk management is so important. Okay. Right. Since Bitcoin seemed to be quite correlated to the S&P 500, what is your analysis on the current pullback? What for the S&P 500? Guys, I do not do any analysis on the S&P 500 or NASDAQ. Maybe what I should do is maybe spend some time over there, but I don't look at the correlations anymore. I used to when I started out trading. A tip of the trade, a tip of the trade that I can give yourself is that I used to look at the DXY. I used to look at Total 3, Total 1, Total 2, NASDAQ, S&P 500. And then you try and find the correlations. Is it going to let Bitcoin go up or is it going to let Bitcoin go down? And then you go into analysis paralysis because, guys, do you know how much work it is to put in a single trade on this chart over here? It takes hours and hours of analysis every single day. Now I have to go and do that on 3, 4, 5 different other charts as well, just to find out if I need to place a trade over here. Okay, I was really still struggling during that time, and I was just analyzing, and then a very experienced, successful trader, okay, very successful trader, told me one day, Dewald, stop analyzing other charts to trade the chart in front of you. Only trade the chart in front of you. Do not look at anything else. You will firstly have a lot less stress. Okay, you won't have analysis paralysis. You won't have any contradictions, and you just trade the chart in front of you. That's all you do. You apply your trading strategy with good risk management. Stop looking at the DXY. Stop looking at the S&P 500 if you want to place a trade on the chart in front of you. And since I started doing that, I turned profitable. Okay, it was many years ago, but since I listened to that advice, because I felt like you almost have to work your ass off just to get a trade into Bitcoin. And then I realized it's actually much simpler than that. I don't have to look at anything else. And that is the reason I haven't looked at the S&P 500 or the DXY ever since. Because I realized that I can be profitable as a trader without looking at other charts. Because it can clutter your mind, it can burn you out, and it can contradict your trade. Because the DXY might look bearish or bullish, and this one looks bearish and bullish, whatever the case might be. And then you're like, okay, maybe based on everything that I've seen, I think we're going to fall. And then Bitcoin pumps. And you're like, shit, now I missed the trade. Okay, or you have 10 indicators on your chart and they're contradicting each other and you don't know what to do. This is why you will see I do not have any indicators on my chart. Nothing. I don't consider volume an indicator. I know it's listed under indicators, but I'm talking about those signals, okay? RSIs, MACDs, the green dot shows buy, the red dot shows your Lux indicators. That shit does not work, guys, okay? It does not work. Right, you need to learn to trade price action. Anyways, that was my rant for the day. Dewald, let's go drink somewhere in Dubai. I'm not in Dubai at the moment, guys. I'm not in Dubai. I am planning to go soon, but I want to go there when it's winter. Okay, it's yeah. I was in Dubai last year when it was summer. Ooh, it's hot. It's really, really hot. So I want to go there when it's winter. I think I'll have a greater time there when it's winter. Okay, right, legends, I've unfortunately run out of time. Remember to smash up that like button. I have been here for exactly an hour. That is what I plan to do for this live stream. Hope you guys have enjoyed the alpha, the education. Have yourselves a great trading day. I hope you guys got in at that 1.618 with good risk management, because there's a chance, okay, there's a chance, okay, just to quickly wrap this up, okay, let's just quickly wrap this up over here. If I go on to the 15-minute, just want to see something. Right. Okay, there's another way, always another way to get into a trade. I will just leave it at that. Legends, have a great day. Until the next one, just for now.